biggest barrier limiting women-led MSMEs from accessing finance in Kenya? Let's hear your thoughts on that particular poll, if you have not left it out. Just to preempt us on our final session of the day, the panel discussion, then we can launch, and then we should be done. Let's hear your thoughts on this. It's part of the reason why we're here, to discuss this conversation and see how this goes. Your voice as well matters as we do this. As we do this, I'll just very quickly, without too much introduction, bring in my panelists. And the first panelist is Naomi Ndele, the head of SME Banking and Agribusiness at KCB Bank Kenya. Please put your hands together for Naomi as she comes. Also coming through as well will be Collins Wanyonyi, the Director SME Banking Equity Bank. Come over, Collins. We also have Nahashan Wamugi, Director Credit Sidian Bank as well. Please come up as well. Karibu sana. Joining as well is Edna Mulwa, Head of Data Metropole CRB. If you don't mind, please come as well. A round of applause to her as she comes. There you go. And then we have Lillian Maru. Yes. Excellent. Yes, she's right there. So please put your hands together for her. WMSME. Welcome. Yeah, this is a good pack. Just checking that everybody got a place. Excellent, lovely. And just in case the screen is too bright, you can see their faces at the back. Today they are Friday look. The other one is the Monday one. Excellent. So welcome. I don't know whether, can you switch back to the poll? We see the results and how they were very quickly, and then we can go back to this. Just wanted to see if that is possible. But I'm sure you have seen your reactions. I actually have some access here. My panelists, listen to what people think that the biggest barrier limiting women-led MSMEs from accessing finance. 26%, actually 29% of the people think it's lack of collateral, or there are more people. Okay, the percentages are, okay, vote then, vote. They keep moving. Poo, 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 poo. Okay, fine. We have at 32 votes. Maybe I'll stop at 40. So keep voting as well. In case you're wondering, how do I vote? It is slido.com, and the passcode for the day is gender. All right. Then we'll be able to do that. Yeah, just I don't know whether you can display it. Okay, excellent. So let's hear your thoughts. Panelists, I would want to hear your reaction, first reaction to what the people think, whether it can work or something of that sort, so that at least we can be able to see how it's going. All right? There you go. So the results are in, and you can see it as well on your screens yourselves. So a lot of people, when it comes to barriers limiting women-led MSMEs from accessing money, finance, they're saying it's lack of collateral, right? That's a big percentage, lack of collateral. And followed closely, but it's actually, that's 30%. The closest close the gap part is product design not suited to women's needs, 27%. And then 23, financial literacy gaps. Yeah, I think I'm surprised that the lowest is unconscious bias in lending decisions. So I think, I don't know, I just expect, but you can see it on yourselves, for yourselves on the screen as well. So I think that should be able to show us that. I don't know, I would want two reactions, just two reactions from you. Anybody who wants to react to those results, maybe you could. Let's go to the equity side of things. Yes, what do you think?
Thanks. Good morning.
Good morning,
ladies and gentlemen.
Yeah, you could adjust the mic a bit so that it sounds like equity. Just check.
So that it sounds like money. So I'll call it Wanyonyi from SME Equity Bank. So the 3 points that have been raised. So the first one is collateral. Is collateral a hindrance? I'll say no. And why is Naomi here gives 10 million shillings unsecured from her bank? So if she can give 10 million shillings unsecured, so the issue about collateral then drops from that equation. So collateral needs is not really a challenge when it comes to SME lending. And I think if I look at the banking spread, of the top tier 1 banks, about 6 banks give 10 million shillings on unsecured basis. So collateral is not a challenge.
It's a good reaction. Anybody else who has a quick reaction?
Then on product design.
Yeah.
No, I'll go to financial literacy.
Mm-hmm.
Financial literacy is not really a challenge, but it's the expectation of what people get when they go financial literacy sessions. So the common challenge I've observed is most SMEs, when they go for financial literacy classes, they assume that the banks will not have a risk review process on their loans. They'll say, I've gone to class, give me the money.
All right, that's a good one. That's a good point. I'm seeing you're testing the back. That means you have something. Yeah, well, what are your quick thoughts? Just quick thoughts. KCB.
All right. So I agree. Collateral is a big issue for women. And this is not because the collateral is not there. It's just that they do not have the ownership rights. So today, banks, yes, we do have unsecured loans up to 10 million. The collateral is probably there, but the woman does not own it or will not be able to present it to the bank. But most importantly, do we even understand or know that woman and the needs she has? I think that is the bigger problem, which then goes to the product design. And in the product design, we need data, which is one of the things we're talking about here today. So how do we identify today that this is a woman entrepreneur and not just another bank customer? Yeah.
I love that. I have seen the polls have changed. Product design is now at the lead and going. Thank you so much for your reactions.
Contribute.
Now, please, ladies and gentlemen, I need you to react as much as possible. There's the poll side on your phone and there's a Q&A. So if you have any question as the panel is going on, feel free to send in your question. It's anonymous, so we don't have to whatever, but if you feel like you want to share your name, you can. If you have any questions specific to any of the panelists here, you can actually start by the name question to this particular person and ask it so that we'll have an easy flow on the go. Thank you so much. When we're talking about this panel, talking about matters, how we see this invisible half, if I may use that word, the first part of being the invisible half, why gender disaggregated data matters in credit reporting. I'd like to start with Edna, I don't mind. Edna from Metropole. What is the current landscape of gender? And I'm sure we have had a bit of it. What does the current landscape of gender disaggregated data look like in Kenya's credit reporting system? And what steps are being taken to standardize gender tagging across institutions? Very quickly.
Thank you.
Yeah.
So
it's on. Just put some volume. I tend to have a big voice. So for them. Yes, go ahead.
Yeah. Thank you. So I think for the bank sector, we need to appreciate that the credit reporting system has really grown, and from where it was in 2012 to where it is now. Currently, I had to extract numbers as at yesterday. We have a total of 25 million individuals in the Bureau database. So there's an increase of 2 million from the numbers that were presented by Gideon. So it means there's 2 million individuals that have increased from Q1 to now, to yesterday. And what is the disaggregation? Women are at 44% and men at 56%. That is the current disaggregation. The beauty about the current mechanism in the credit reporting system in Kenya is that there's a standardized way of submitting data to the Bureau. And one of the gaps that you may have noticed in the dashboard that we've been able to support KBA and FSD, you will see that there is unknown, and this is due to historical data, especially on shareholder information, where we were not tagging gender previously. But now, as at 2019, with a new data specification template, we're able to tag these shareholders and clearly indicate what gender these people are. So I would say we have made significant progress as an industry, awesome. And it's inclusive not only the bank sector, but the SACCO sector, the DFI, the DCPs, and the information we receive is standardized across. So if a DCP is submitting data and a bank is submitting data, we are able to aggregate correctly. Yeah.
All right. Thank you so much for that context. Let me come to a commercial bank perspective, and I want to bring in Collins. This absence of gender data, how does it influence how MSMEs are served? What have you observed?
So that data becomes a critical resource to align people on which way to take. If you take an Uber today and it shows you a certain road has deep red, you'll certainly avoid that road. And that's what banks look at. So when there's no clarity around what data sets you're looking at and how that data will affect it, then it will be a deep red and you'll certainly avoid that road. All
right, lovely. KCB, right here next to me. Quick question as well. Any challenges you faced, or what challenges have you faced in ensuring gender data accuracy? I think that's a very important point there. And how does this affect as well your product strategy for women-led businesses?
Thank you. So indeed, the data is there. The challenge is the accuracy. And not only just the accuracy, but it is fragmented. It is inconsistent. And just as has been shared this morning, we haven't been coding it, or we haven't been tagging it in our systems. Allow me to take you back to days of passbooks. Customers were identified by a passbook. We graduated to an account number. Now we are at telephone number. So customers are actually a statistic in the bank. So how do we then, the banks? Secondly is the informality, and it has also been shared today. A lot of women businesses are informal. They are not registered. So it is the business owner who knows she has a business. So how does the bank then identify her from a crowd of 20 million customers to be able to design a product for her that will meet her needs? So those are the critical challenges we are facing, especially on this gender data accuracy.
Wow. Okay, thank you so much for that. Let me bring in CDN Bank's perspective, Nahashan, if you don't mind. How can credit departments integrate gender data into credit appraisals and risk assessment processes? We're talking about here credit departments integration. If you could share some insights on that.
Thank you. In terms of from a credit risk management point of view, if you go to most banks, you are going to find that in their credit assessment and the credit scorecards that they use, they will actually differentiate borrowers based on gender. So that is there. I think the challenge we have, which is part of what my colleagues have talked about, is that the information stops at gender. So there's much more you need to know about a borrower besides just their gender. So what is their age, in business, what are they doing? Sometimes the impacts around somebody's family size, what's the level of their the age of their children. And then this affects the product offering. So the two things that have been highlighted by the audience is mainly because as risk managers, we then don't have granular information that would enable us come up with products that are focused to various age sets and areas, various business segments of women. And so then you find that the products that you find in the market mainly will then be general in nature as opposed to specific and meeting specific needs of the women. And let me also just add and say, in fact, the difference why you see a difference between the microfinance and banks is because microfinance have a better framework for data gathering. because they will actually go sit down with this customer, get a lot of information about this customer, and because of that, then you can be able to probably offer a product that is more specific and more responsive to the need of the borrower.
Awesome. Thank you so much for those insights. In the panel, we have Lillian. Lillian is on the ground. You know those people on the ground? Entrepreneurs, women entrepreneurs. Lillian, how are you? It's good to see you. And you know, these guys are speaking very nice terminologies and good things, all right? But let's speak from the ground perspective. And I wanted to ask you, what do you feel from your own experience? Do you feel that women entrepreneurs actually feel seen? Are they being seen by these guys? Are they being even felt in this entire financial systems? I just want to stop it at that. Do you feel, and when you talk to even women entrepreneurs on the ground, what are they saying? Go ahead.
Thank you so much.
It's actually on.
Okay.
We just need to add some volume on that. Not on mine, on that. Yes, go ahead.
Thank you so much. My name is Lillian. I'm an SME. I do value addition. I produce leather bags and non-leather bags. That is in leather. I also do Ankara and all other materials. My main customers are corporates. Those are banks, insurance companies, and professional bodies. And
Just wait, Lillian. Did you come with some? Unajua sisi watu wa biashara.
no, I didn't bring some.
But where can they find it? Because I can see some people with very funny bags here. We need to.
I'll give my number, then they can reach out.
Awesome, that's okay.
Yeah,
Sisi tuko biashara. Yeah, go ahead.
Yes, okay. I would say as women SMEs, we are hard and we are not hard equally. Some of the challenges that we face is collateral, like it's been said. I think everyone who speaks, they speak of collateral, because I say women, before you now graduate, become the corporate woman or this woman who has money, the only collateral you have is your kid's birth certificate. That's the only thing you have before now you graduate. Then there is the application processes. You have to fill in, they have to come take your photos, take photos of your employees. I think that's, and compared to SACCOs and the online lenders, they don't even know you. You just fill in the form. I don't know how they do the credit assessment and they give you the loans. But with the banks, you really have to do so much work, the paperwork and all that, which is okay because I tried to ask one of the bankers where I bank and they said it's okay. There's the personalized services, but there are rules which you must follow. Then there's the challenges on changing in requirements. Like you go this year, you have an LPO, they will finance it and say they are doing it unsecured. The next LPO you get, they tell you, we are no longer doing unsecured LPO financing. So it's kind of hard because you cannot even take a business from a customer. You are fearing the next thing, the bank will say they are not doing LPO financing without a security. At some point, my personal banker said, why don't you just get a land, we buy for you, then you'll be using it as a collateral. Then there is another point where women are tied into groups. They say, we can lend to you, but you go get a group of women. And in business, we are all on different levels. So you find that tying women into groups doesn't work for other groups because some women are higher, are on another level, and some are still startups. The other one is women are spread on different sectors. Like me, I'm in value addition. There's another one who is in the lowest pyramid ya biashara, and they all want to get facilities because women, they really want to grow. Like when you start a business, if you hit 1 year, you are really looking forward to get that financial to take you to the next level. But you find that there's no bank which is willing to partner with you when you are uko pale chini. That's why we end up going to chamas and to mobile banking and those other things. And
then the final one, because I know there were 16.
Yeah, the final one is when you go for mobile banking and you are a business person, there's normally a very short repayment period, which makes the business struggle and you might even just end up closing. Thank you.
Thank you so much. And you know, because of all those challenges you have listed, I want to do a quick one-line answer from this entire panel coming this way. You're the guys with the money, and you've heard from the ground. We've just read 4 of the 16 challenges that you're facing. So I want to ask you this question. What can the Kenya financial ecosystem, you guys are the ecosystem, all right? What can you do to make women's credit worthiness more visible and better represented? What can we do? And I know, don't say what you've done, but just what you know this needs to be done. I just want to start from that and come in this way. Go ahead. Just one line in your own thoughts so we can close that part of credit worthiness. Go ahead. What can we do?
I think from listening to her, can we, as I think speaking for the bank sector, can we listen and build non-collateralized products that can support her? So can we have a digital space for the bank that she doesn't have to take photos and just be able to lend to her?
All right. I think I got it. So you're saying listen more and give non-collateralized money or credit, right? Excellent. Let's go to Sidian. What can we do?
Yes, to me, the biggest hurdle is adequate information. So we need to work together as all stakeholders, because as mainstream banks, we don't have a lot of data on women, but the data is somewhere. So we need to work with the telcos, we need to work with the utilities, we need to work with the CLBs and get a bit more granular data on our women, whether in employment or in business. Because once you have that data, it is not difficult for any bank to come up with solutions and products that are actually going to address some of those concerns.
Okay. We come to equity.
Thanks.
Yes.
So I'll mention some of the things that we've attempted to do. Have we done it to the best effort? No, but at least we're on the journey. So the first one is having a standard descriptor of who a woman business is.
Okay.
There's been a number of variances on that. I think the most common one is the AFAWA descriptor. So how many of us have adopted a common descriptor of women in business? Then so that becomes easier to have a standardized approach to understand who you're talking to. The second piece is for those who have limitations of collateral and the likes, how many partners can we get into? An Africa Guarantee Fund comes top of mind to then say, can we get guarantee funds to support that? And AGF is giving about 75% guarantee to women. What we've attempted to do from an equity perspective is what we call customer effort score. And customer effort score speaks to the rigorous challenge that the customer faces as they try to get our service, and look at how do we remove the challenges in that process.
Okay.
And the last piece is how do we use alternative data? So for example, in our ecosystem financing, what we've done is, other than using the customer's data, we then use some of their partners' data to make a decision to lend it to them.
Okay. Thank you so much. I pity you because now they have said so many things. Now you could close that part. We want women to be credit worthy. Go ahead.
Okay, so I think like
Some volume, please. We just adjust one more time. Go ahead.
yeah, the risk of being the last person. So information is important. I think we need to have or establish an information hub, a place where we can collect information about women in terms of how many businesses are out there that are informal, that require registration, that require support in terms of financial access. I think it's very clear, like what with the testimony we've had today, the number of questions that women are asked should be found in a place, central place, so that we don't keep asking them those questions. So that information, a central information hub that gives us a lot of information about women. And I think a lot of banks have tried to come up with products for women. I think it's time that banks are incentivized for giving this kind of loans to women. Maybe have a tax regulation for banks where banks are exempt from some form of tax. to enable them find reason to lend to women. Like she said, the questions that are asked to women when it comes to lending are very different from what men are asked. It's annoying, but it's true. It's a fact. And allow me to just share this example from a recent engagement I had last week in a rural area. It was a dairy cooperative and they were being trained. The cooperative members who bring the milk to the dairy were being trained. And from the records, a lot of the names were male, but the people in the room were women. So they started awarding the women who had done very well. And the top one I took interest on was, allow me to just use this name, was John Kamau. So John Kamau was called up, and of course, it was not John Kamau who came up. It was Mary Kamau. So I took time to speak to her and asked her, Sasa, why is it that you're being referred to as John Kamau? So she told me the records at the dairy are for her husband. Why? Because he owns the cows. But I take care of the cows, I milk them, I feed them, and I make sure the vet comes to take care of them when they are not well. When the money comes, it goes to. So at what point are we lending to Mary Kamau? Let me leave it out there.
Just leave it there because John. All right, that segment is about creditworthiness, and I hope you've gotten something out of it. If you have any question or contribution, feel free as well. I'll be reading some of your comments. Allow me to segue now to what I want to call designing gender-smart financial products and policies, because we've talked about designing. And my panelists, it's quite a power part because, as you can tell, my people here are keen on what you're saying, so that we can get as much as possible, try as much as possible to make your comments straight to the point, short as possible, so we can be able to maximize on what we can get. The only challenge I have is the two big banks here, but we'll have a discussion with you. I think it's because of the gender data you have. Now, let's talk about designing gender-smart products. And I want to start with you, Naomi. First, mainstream banks really want to balance a lot of commercial objectives, of course, with designing these gender-smart products and inclusion. I don't know what you want to say, what they can do to really mainstream and ensure that this works. What did you comment on that?
I think Colin spoke into it about defining, having a very clear definition of who are women-owned enterprises. Yeah. I think today, each bank has their own definition. So we need to have one definition. Today, we know who a micro is. We know who an SME is. Do we know who a woman SME is? We all have our different definitions. So we need to start by developing a definition for formal women-owned SMEs. And like I said, establish a firm knowledge base for these women so that we're able to pick out that data and truly design with the women for them. We cannot leave the women in the designing of the products. I know it's difficult. Like I said, some of the women are in very far-flung places. They may not be able to share, but a quick survey across the country, because most of the times, large banks design for women in urban places because they're the ones who come to the bank. How about that woman who is not able to reach the bank? How do we design for them so that they are actually getting more than what the fintechs are giving them or what their mobile wallet is giving them? Truly move to productive credit that will enable them grow. So that is one particular one. I think we also need, allow me to just share one other one, okay, is to understand that subsegment of women SMEs as a business segment. It's not just another, should I say add-on? It is a segment and the business case is there. if it is definitely supported with data.
All right. Thank you so much for that, Collins. I think I want to pick it from there. And also, even as you're bringing in your thoughts on this, talk about, or could share an example maybe, all right, of how gender-disaggregated insights have informed the design or success of specific financial products for women MSMEs at Equity. This design stages. Go ahead.
Thanks. Well, I was listening to Naomi's example. I thought I should also bring this. So the mindset that probably a number of the people in the rooms have is it's only the lower cadre of woman who is disadvantaged on this. I have this example of a lady who started a large corporate. She started a medium-sized corporate. Turnover of this organization is about 10 billion shillings. She started that business from scratch. But with time, the husband has joined her in the business. In all the financial conversations, people look at the husband as being the owner of the business and not her. So the discussions about John Kamau, it's not just at the micro level, it also sits at large corporate level. And it's something that we have to be alive to as a community. So what we've looked at, just trying to solve this, is classify the woman on the basis of some aspects of life and the business so that we address the right. So you have to give the right prescription to the right challenge. So how have we used the prescription? So if allow me use our women product proposition, which we dubbed Fanikisha. For Fanikisha proposition, we've classified the women business people into three: Fanikisha Shaba, Fanikisha Dhahabu, and Fanikisha Almasi. And these three categories, we've used some basic credit terminologies to support. So for example, Fanikisha Shaba is for the woman who's a startup up to 12 months. And the needs for this woman as a Fanikisha Shaba are pretty simple. So it's not as complicated. So we try to simplify how we serve her, how we qualify for a facility. For Fanikisha Dhahabu is a woman who is over 12 months, but below 24 months, and has a turnover of about 50 million shillings. Again, we classify that woman as Dhahabu, and also the solutions we provide to her are based on the dynamics of the period that she's done business and the level of turnover that she's done. Then our last category is Almasi, and Almasi is for the woman in business who has been in business for more than 24 months, but equally has turnover of up to 800 million in terms of turnover. And this is a well-exposed woman if you look at her business and her requirements. So for example, if I'm to issue a debit card to a Fanikisha Almasi, I will give her MasterCard World. I will not give her the basic MasterCard, because for a MasterCard World, when she's traveling to Turkey to bring her goods, she would like to go to the lounge, have some coffee before she flies out. So those are the then solutions that we look at to package the solution on the basis of the needs of the woman. And the other piece that we've also observed as we package this is to solve for the woman. How are we solving for the woman? Most of us who play in the insurance space, the assumption that has been there is the principal holder of the insurance medical cover is a man. So you're either coming as wife of the man or child of the man. So what we're doing with our Fanikisha is creating a insurance medical cover with a woman as the principal. Because most often we talk of single mother, but rarely do we talk of single father. So as we look at the single mother item to solve, then we're bringing a medical cover that should be able to cover at a basic level this mother as a principal, and probably 2-3 of her children, and probably the niece from her sister that she's also taking care of, to solve for the woman in totality. So that is how we look at solving for the woman, and then classify it from the various levels of needs that the woman has. Thank you.
All right. Thank you so much for that. Nahashan, I want to bring you in, but before you come in, allow me to just speak to Edna, then come back to you. Edna, any innovative credit assessment methods, or what are they, such as alternative data? I had that comment come up there, that show promise for expanding credit access to women entrepreneurs. Anything that you may have? Go ahead.
Yes. So currently we know alternative data like the mobile transactions are already being used by some of the institutions to assess these women. But how can we even get data on, track their savings behavior? How can we, together as an ecosystem, not only the bank, but all the sectors, come together to have an information hub? Like Naomi mentioned, we don't have a central place where we can be able to pick this data and analyze data that is sex disaggregated. And currently, there's a policy under review on national credit information sharing policy by the National Treasury that is bringing all the stakeholders. What does this mean? It means the credit assessment data that will be used going forward will be of additional value to be able to really tell the women-led MSMEs and not only use bank data, but as a business, can we see how are they saving, how are their inflows, and track it from a system and not from a book. So that is critical. And working also with the bureaus. Bureaus are already aggregators, and how can we incorporate the data from the bureau in the credit assessment tools? Already we can see from the data, SACCO is giving more than the bank sector. And why is that? It means they've been able to assess these women better and be able to get more just to learn them and understand them.
Awesome.
Yeah.
Thank you so much. Assessment being done better there, so there are learnings there. Nasha, now you could come in and talk about what credit process innovations or scoring adjustments that can help expand access for women-led MSMEs. What did you say on that?
Yes, if I look at the cycle or the journey that you go through as you make a decision to lend, first you're going to start with you have to have some products that you define, you have to have some customer segments that you are targeting. So as financial institutions, then we need to, have an understanding of, the women segments and the various needs, and from a holistic perspective. I think it's Tamara who talked about the reason why sometimes women businesses fail is because the woman will, do business, but on her way home, she'll use that money, buy some shopping, or take that money, go and pay school fees, and most of the times in cash. So that money is not recorded anywhere. So it is not useful tomorrow for purposes of credit decisioning. So we need to understand those realities, and even as we walk through in terms of the solutions we are offering the customers, there's a bit of education, there's a bit of a journey we have to be willing to walk through as we define various solutions, so that if in this example, instead of the lady using her business money to go and pay school fees, you can be able to offer a school fees loan, which has a slightly longer tenure and thereby doesn't kill the business when all the money is removed. The other bit is just around the portfolio monitoring. So I think we need as lenders to also be able to clearly understand the performance of women businesses and portfolios in our customer segments, because then that will actually be able to help us have a bit more confidence in dealing with the women in the businesses. And the last thing then I could probably say is even as we structure these solutions, I think it's important that we make sure that we collect as much data as possible, keep that data, and then use it for purposes of understanding women behavior. Because as we build this data, then it will also help us be able to address some of these concerns that have been raised, for example, around collateral. Collateral becomes very key because you have a lot of fear about the person you are lending to. But if I have confidence in you that if I give you this amount of money you are going to pay, I might be able to de-emphasize the aspect of collateral and walk with you through a journey. Or I can be able to structure a solution for you in the case that was highlighted about an unsecured LPO finance. I can be able to look at where are you going to be supplying these materials and structure a solution for you that does not necessarily require collateral, so long as I'm able to tie the process of delivery of the goods to the person you're going to supply to, and also make sure that as you're getting paid, I've also tied that money to come to me. But this then requires us as lenders to actually be able to understand and be very close to our customers so that then we're able to offer solutions that would actually respond to some of the challenges that women are facing currently. Yeah,
All right.
Thank you.
All right. Thank you so much. Hey, big words there. What we can do to ensure that we have all our women included, especially in the design stages. Now back to the ground. Lillian, you have had them. Do you think the women, when they hear what they're saying, are they going to feel that, yes, these people are really thinking about us? I just want to ask you that question. You can speak from your own personal perspective about what you feel when you hear these gender smart products that they're talking about.
I think it's a good move to have women products because women just need to be understood. Because when I come with my case, the other woman has a different case. And as I said, we are all yearning to grow. The reason as to why we took the first step, we took money from Chama. Now we need to get some financing for us to be able to move to the next step.
Mm-hmm.
So we just need flexible products for women.
Okay.
I would think that's all.
Excellent. I think that's all. They are straight to the point. Make it flexible for us. At some point I was wondering, did you hear? I thought it's a public holiday today, but just no, we're good. We're good so far, so good. I think you heard from her. She's speaking on behalf of so many people that make it flexible. Make it flexible. Don't complicate the whole process. I'm sure you could have so many reactions on this, but I want to throw it back to the audience. Feel free to share your comments as well on that part. Now, my panelists, I want to close this session by very quick answers to my next part of questions. Clock is not very nice with these people listening, too many heavy things. So let me come to the part of building collaborative ecosystems. And the reason is because there could be cross data sharing. We're talking about data, and you've heard from the presentation that sometimes you may not labor yourself much. Yesterday, one of the biggest corporates in the country released their half-year results in the billions. And they were talking about how they have a lot of data. Like they measured a bit on Fuliza. They were giving an example. There's a lady who wakes up in the morning, takes a Fuliza of 5,000 shillings, goes to the market, buys her products, goes and sells Mama Mboga 1, 2, 3 here and there, makes her 7K, returns the Fuliza, and that's enough data that the banks as well can also borrow, and you'll be able to know the credit worthiness of this lady. She has been faithful for the whole year. I'm just saying. I just had that and I thought, that works on it. Alternative data as we're speaking. So building collaborative ecosystems. Let me start with you, Edna. How can CRBs and banks work together to maintain data quality and ensure regular gender-disaggregated reporting? Very quickly.
For data quality, I think one of the things with the data we're able to share with KBA is we realized the KYC process is not capturing data as it should. Like, I'll give an example. Annual turnover for more than 200,000 of the businesses was 1 shilling. So it means it's a checkbox when sharing that information to the CRB. As long as it passes the mandatory check, then the data sits at the bureau. But how can we work together as an industry to correctly report MSMEs, give the correct statements, especially what is the annual turnover, number of employees that these businesses are handling, the shareholder information, can we capture it correctly and share it correctly to the bureau? Because with improved data quality, we will correctly assess these women-led MSMEs and be able to accurately give them loans without having to ask for more information from them. So already there are collaborations, and for me it's to employ you to consistently work with the bureaus, the CRBs. Already we have good engagements. Let's continue that. Let's improve the quality data. Currently, we are proposing additional fields in the data submission template, the information that you share with the Bureau, to just correctly tag an MSME. Is it small? Is it medium? And through the guidance and working together as an industry, we will give a definition and we'll be able to share this information. So this is what, for me, I'm looking at. And we'll be able to give better insights, and probably a year from now, we'll be able to tell a beautiful story.
Yeah. I'm just trying to think top of my mind, because we have had examples that sometimes when we're talking about gender inclusivity, it's not just the women at the lower cadres, that we have had the billionaires as well, who are there as well and are also having their own challenges, as you've given as an example. But the majority, though, are at that cadre that we're talking about. And I wanted to just throw this to the panelists, maybe one or two comments. How do we ensure that whatever they are doing, because we've talked about creditworthiness, you are able to see that data? How do you ensure that we can be able to do that? Anything that you think of? And maybe I want to start here. Collins, I think you're ready. What can we do to ensure that we're able to see this, that they don't even have to come to you? You can even go to them and say, I know what you're doing. We have seen your data and we're able to help you expand to this level like this. Go ahead.
So there are two items that come top of mind. So the first one is CRB reporting. For the longest, when CRB was introduced, it was introduced as a negative, with a negative connotation. So when you're on CRB, you're a bad guy.
Yeah.
And my ask is for the bureaus in the house, how much more can we do to give the general impression that being on the bureau is not a negative thing? Because the moment that mindset was built, that CRB is for the negative players, if you're an AA on CRB, you should actually walk with that AA to the bank and say, I'm an AA class. Can you give me money? So that's the first piece. But the second piece is of the habit of the entrepreneurs. We tend to hold back financial information because we are avoiding the taxman. And because you are hiding information to avoid the taxman, you then hold back information that the bank should ideally use freely to give you favorable review. So those two items are some top of mind, I think I'll put on the table to say things that can be able to help us improve on lending.
All right. I see you're preparing. You got something? Go ahead.
For me, I think data integration is important. Today, there's a lot of data sitting with fintechs, with mobile service providers, with banks, with SACCOs. And I think it's time we started sharing that data. So that secure share is important, because then we will be able to have alternative scoring models. Today, we score based on transactions, what we see from the bank or from the statement. I think we need to move to behavioral scoring, where we actually see how a person utilizes 360 their financial access, be it whether it's a loan from a SACCO, whether it's from a mobile service provider, that ability to see that data across board. So sharing of data through APIs, digital integrations, I think that will take us milestones forward.
Okay. I love that. Nahashan, are there any indicators we could be able to say we are tracking and we're doing well that you could think of? Because we constantly can speak very well, say we're going to do this, but we need to track progress and be able to say, yes, it is working. We can say that in the next meeting, with women-led enterprises that have been added are now 2 million. I'm just saying a very good number, but anything we could do to track that?
Yes, there are those high-level indicators in terms of number of loans to women or the other genders. I think that's there, but we really need to do more. So we need to look at, as I think I mentioned earlier, to say we need to look at different segments and different, customer segments of women. So because, women need very different solutions and they have very different needs. So when we track it just at gender level, then there's so much that we are missing. Mm-hmm. And maybe for me, the solution or part of the solution to this is there's a lot of information sitting with, for example, supermarkets, and women frequent supermarkets more than men. We probably need somebody who can be able to get us a bit of feasibility of that data. There's a lot of data sitting with the counties on business registration. Again, that will actually give us a lot of insights about the small businesses that women are doing. Telcos, we are working in partnership with them. Utilities, as well. So if we are able to get this information as lenders, it will actually help us in a big way, and then help us also be able to be a bit more granular in terms of performance tracking, or behavior tracking of the various segments, and also financing needs of customers.
Okay.
And also, I think the solution also is not just about offering lending solutions. I think we also need to look at offering, for example, investment solutions, healthcare solutions, family solutions, because it is probably well known that women fear credit. If you men are happy to, if you tell a man I'll give you 100 million, he will say yes, and then decide what he's going to do with the 100 million. If you tell a lady I can give you 100 million, she'll say I don't want problems. So can we then also able to start that journey, so that as we offer these other alternative solutions, we then can be able to give women confidence that finance institutions are actually friends. They are not your enemies. They don't just come looking for you when you have not paid their own. They actually help you in a great way to grow you and to meet your financing solutions.
Okay.
Yeah, thank you.
One of the women's on this side, I don't know who was saying, try me. But anyway, let me just get to the comments. And even as I'm reading some of the comments, please help me. There are so many questions that have come in. I would like you to, if you look at the end of it all, there's a thumbs up. Help me identify the most critical ones that you would want answered. Please don't vote for your own question, Kenyans. Just look it through as well. Help me know that this one is a very critical one. And as we're getting to do that, just listen to this one. It seems like the issue around women accessing credit is more of a social and cultural issue rather than product, collateral, etc. Do you agree? It was someone who just said that, and I thought, okay. So help me. You could as well help in terms of voting on some of the, wow, I like the reactions. Guys, they are important. One of the ones that is highest voted is on NPLs, and I think that was when we were having the presentation of the data, that the higher NPL for female-owned legal businesses could be some men hiding behind women businesses to take a loan, then default. So that's a comment. Do you agree? Wacha nitoe hii. It's okay. Thank you so much. Men, do you agree? Oh, they're quiet. I think that's some of them are hiding with them. Let me look at this other question. Do women in business, okay, I was like, is this a bus or what? Okay, someone wrote in short. Do women in business have different needs from men in business? For example, what different product would a woman in farming need compared to a man in the field? I don't know, what are your thoughts? Maybe Collins, you're the one who I saw you get an award because of farmers. Do women in business have different needs from men in business?
I'll say yes. And allow me use, it's not one of the best examples, but allow me use it. So one of the customers we were having an engagement 2 weeks ago has to shut down 2 days a month, literally. And so every month she has to shut down for 2 days. And certainly once she shuts down, she's shut down. Nothing happens. And this is a business that requires her physical presence for the business to run. Mm-hmm. So will you then give the same needs for this business between a man and a woman? No. Okay. So they have the dynamics that have to be addressed.
Okay. Panelists, if you feel one answer that has been answered, you feel like you have something, just look at me with that bad eye. Then I'll know that you have something else to add. That's a look. Okay, go ahead.
Yeah, just a quick one, and as a comment on the NPL issue.
Yeah.
or non-performing loans issue, we like using code names and assume everybody understands. So I know there's a lot of hype in the media around the increased non-performing loans, which sometimes covers the real story about this. The challenge is about looking at NPLs from a ratio point of view is that we forget that majority of customers who borrowed repaid their loans. And the customers who repay their loans, they repay their loans faster. The customers who don't repay your loan take time. So whereas we, at industry level, maybe we're talking about an NPL ratio of about 18%, in reality, the customers, if you look at it as a proportion of customers who borrowed vis-a-vis those who have defaulted, is actually less than 5%. And we need to put through the story to say 96% of customers borrowed and they repaid and they benefited from financial services. So even as you talk about women and the fact that probably they are very worried about defaulting and the consequences of that, it is also important we appreciate that there's a whole 96% of customers who have actually borrowed and they have benefited and they have actually been supported by the financial service providers.
Okay, thank you for that highlight. By the way, there's another one here. This is interesting that we have female bank CEOs. Is there any evidence that shows that their particular banks are lending more than the male-led banks? Wait, she has just left. Huh? Are you talking about DTB or what? We know. Just checking. I don't know whether we have any evidence, but at least there's evidence we have women-led banks, right? Yes. What are you saying? Are you giving more loans to women? I just checking. Like Family Bank too. Yes, you're right. Yes, Family Bank, DTB. We know you. So that one we will skip. I don't know why your voting is so high. Yet anyway, thank you so much. Let me move to the next one. We see women borrowing from SACCOs, meaning women actually borrow. It is a matter of interest rate or no, is it a matter of interest rates or general lack of products for businesses rather than for women? What's your comment on that? Who's the case of it?
That is true. Women prefer to borrow from non-commercial banks. Chamas, SACCOs, and this is because of the requirements that commercial banks have. And Collins did say that women have unique needs compared to men. But when you look at the requirements, they are one size fits all. So indeed, it is true. And it is a challenge to the commercial banks to actually try and understand what the women require and then customize the product so that it is able to not compete, but complement what the SACCOs and the microfinance organizations are doing. But allow me to just comment on the issue about women run away from loans. Mm-hmm. The fact is, women are risk aware. They understand what it means to take 100 million and give your house as collateral. Because in the event of anything, it means the family will have no place to stay. But true, a man will say, take it, I will figure it out. So it's not a matter of running away from the risk. It's just understanding and bringing the family values to the fore and making a decision whether that credit is necessary or not.
Okay. Lillian, there's a question here. What's the biggest challenge you faced when you were trying to access a loan?
The documentation. And because initially when I wanted to take a loan, I had not regularized my business.
Okay.
But I had to do it because I needed a loan. Mm-hmm. Then I needed to get a guarantor. And it really took me time to get someone who can guarantee me to even get the micro loan from a commercial bank. Mm-hmm. But eventually I did.
Okay, awesome. Thank you so much for that. Ladies and gentlemen, we have so many questions and thank you so much. What I'll ask the panelists, by the way, There are some questions that were very specific to you. The reason why they asked them digitally is that as long as you're logged in all through the day, go check, answers will be given. Okay? So nobody will be left behind. That's the beauty of asking them this way. But this one that was also so highly voted is the last one. Edna. Clearly, John Kamau Dairy Farm is a woman enterprise. How do we get the data to confirm this? Now, who is this? just checking. I don't know. Do you have anything to say? Why did they specify to you? Do you have anything to say on that?
I think because I come from a CRB where we can be able to tell who John really is.
Mhm.
Yes, we can say John is a male who is a dairy farmer. But unfortunately, we cannot tell who Mary is.
Okay.
Yes.
Awesome.
So how can we work to ensure that we can be able to capture what Mary is doing and be able to say clearly, Mary is the one running the business.
Okay.
Yes.
I'm going to be very fair. 30 seconds each. If you cross that line, you will see me looking at you badly. What's your attitude or any other thing that you want these people to know on our subject today? I can start here, then we go this way. All right? Go ahead.
I think it's come out very quickly, very strongly, that cultural norms are one of the big issues around this whole discussion.
Mm-hmm.
And we've talked about capacity building, supporting women, and just this technical and awareness creation. I think it's time we had capacity building for men to just understand why it is important to support women entrepreneurs and this financial access, where we bring the men and share that data and show them that women truly pay and what the women do with the money. And it's not about women's rights, it's about empowerment and building our economy.
Okay. Thank you so much. Collins, go ahead.
I'll stretch my 30 seconds by just a minute. So one.
Stretch.
I'll explain this. So for example, the John Kamau story, the AFAWA classification of women in business takes care of that.
Yeah.
So AFAWA classification takes 4 determinants of a woman in business. So the first one is over 51% of shareholding being held by women. The second piece is 30% of the leadership being women. The third is 70% of the labor being women. And the fourth one is producing exclusive women-consumed products. So from and that's why I spoke earlier. If we have a standard classification of who a woman in business is, that will help. But AFAWA has come to done that. Mine will probably challenge KBA to then say, can we have all banks adopt AFAWA as a line of engagement? Okay. And then the second piece of my 30 seconds is interest rate is split into 3 items. So there's a lot of discussion around interest rate. And I thought I could just take this moment to demystify. So the first aspect of interest rate is finance cost, the cost that the bank pays to access that money to give you. The second piece is the administrative cost of giving you that money. So paying for the bank CEO's good suit. And the third piece is risk profile. Now, the first two, you can't change. The last one, risk profile, you can change as a customer. So while we keep saying we need to reduce interest rates and we compare SACCO interest rate to bank interest rate, it's like comparing apples and mangoes, because for the SACCO interest rate, it's based on a guarantee, communal guarantee process where the risk aspect has already been eliminated because you'll jump on the other person's shares to cover. Okay. But on the bank side, that risk is independent to the individual. All right. Thank you.
Okay, thank you so much. Nahashan?
Yeah, for me, I would want to give hope to women.
Oh, yes.
We are not where we were 10, 20 years ago. I think we are making progress. Probably the progress is slow. We need to do much more. But for me, is if you find a lady out there who is doing something, they need support, please refer them to a financial institution. We'll be able, even if there's nothing, we can be able to create some basic financial, record for her using whatever is available and start her on the journey on financial inclusion as we see how to grow them. So as much as we are not where we should be, for me, I think there's hope.
All right.
And that's what we need to tell all the women.
Lovely. Edna?
Allow me to have 2.
Huh?
Two.
Or two final. Okay.
Yes. One, a challenge to the banks.
Right.
How can we ensure that we embrace real-time reporting in the sector, in the CRB environment, so that we can be able to capture this lady who gets a Fuliza, a mobile loan in the morning, pays at lunchtime, gets another one, pays, so that we can be able to tell the behavior. So how can we embrace real-time reporting to the CRB? Real-time reporting to the CRB will ensure everyone is able to capture this behavior. And the other one, as an industry, how can we embrace financial literacy to these women-led entrepreneurs to just ensure that we collaborate in educating them, and so that they can be able to know that these are people who are welcoming us and they are educating us so that we can be able to handle these loans. Yeah.
Thank you so much, Edna. Lillian, you have the final word. I want you to say whatever you feel to these guys, but just close for us. Go ahead.
Okay, thank you. One, I'd pose a challenge to the banks to come up with products for women, and women who are just wale wako chini kabisa, the lower part of the pyramid, because they want to come up, but they don't know how to. Number two, we can have the banks do the capacity building, because most women, they fear formalizing their businesses because of maybe the taxes and all that. And they even don't know how the taxes are put together, because I think like the VAT is not something where they're not going back to your money, and they may just fear that and not formalize their businesses. That's why banks shy away from them. And if the bank can be able to do that, I think that's all women can take up the loans, because anyway, they take loans from Chama and from SACCOs. It's only that banks, I think the least amount you can get from a bank is 150,000, and maybe the women want 20,000, like the way he's saying on mobile loans. Then mobile loans are repaid within a span of 1 month. Even if I'm doing a business, again, I invest 20,000, then I pull it at the end of the month, then the business is just meant to go down. So I think the mobile loans, even from the banks, should have some, maybe 2 to 3 months repayment period. The other thing is maybe the banks can also encourage women on saving. We come up, when you come up with the products, you can have side by side, whatever amount you are making, like Hustler Fund had something like that, I think, where you are saving. And I think the saving can also be used as collateral, because there are those insurance policies where you take them and you can use them as collateral. So you have bank accounts. I think sometimes you feel safe when all your money matters are in one bank. You can have the saving, like it's a policy, saving policy in the same bank, where you bank for your business, where you bank for your kids. So you think that bank understands you very well. But right now, you have to go for an insurance. You have to go to insurance company, to a SACCO, to a bank. I think there's so much mix up. So when you want to take a loan, you don't know whether you should go to the SACCO. I think we just need some products added to women products. Okay. Thank you so much.
Wow, the last word, umefunguka yote. There you go. Let's appreciate my panelists. Thank you so much. I would ask us kindly to stand very quickly. Just drop the mics on the seats. Stand. We want to take a quick picture. Photographer is ready. A quick snap as evidence that you committed. By next year, this time round, we shall come to check data, right? What you have done. Thank you so much. So look at that gentleman there with a good smile, something like that. Yes, there you go. So that at least we can appreciate. By the way, some of you have comments that have what we call makasiriko in it. Can you listen to this one of it? Someone is saying, which business is risky? A business run by a woman with many children or none? You know? And how does this affect societal values? Someone here has been pricked. We are sorry. It was a session. It was not me. So thank you. Guys, you may have your seats now. So that we don't crucify you too much, you know? What is the correct definition of a woman-led enterprise? Questions. Thank you. Let's appreciate them one more time. Asante sana. Hey.